I'm Charlotte McLeod with the Investing News Network. Here today with me is Mercenary Geologist Mickey Fulp. Thanks so much for joining me today.
Thanks for having me once again, Charlotte.
Of course. Today we're here at Mines and Money in New York. Tomorrow you'll be giving a talk on the uranium space. We've had a number of major producers cut supply recently with little reaction from prices. Do you think more supply cuts are in the cards?
I think so, because at $21 spot price, which an increasingly larger the market is being sold on the spot market versus long-term contracts. I think we're going to see some more supply disruption, if not destruction, going forward.
What about demand? It seems like the broad consensus is that uranium demand is only going to rise moving forward. Where is this demand going to come from, and when might it emerge?
Well, it's emerging every year. We're looking at 3 to 4% overall growth of uranium demand. I don't see that ending. There's 57 reactors being constructed right now, and another 160 or thereabouts that are planned, which means they've got initial financing and permitting. So that demand's going to increase. It's the only source of base load electricity that we have left that's not generating a large carbon footprint. So demand's coming. It's going to increase going forward. But we've still got a supply-demand imbalance. Got too much supply still on the market. A lot of that has to do with the fact that we still have something on the order of 45 Japanese reactors offline compared to the number they had pre-Fukushima.
Investors have been hearing for a long time that uranium prices are set to rebound, and in your talk you'll be talking about whether investors should be cautiously optimistic or concerned. Which way are you leaning right now?
Well, the question is when, and I can't answer that question. I don't think anybody can. The uranium market is extremely opaque. It's not only about mine supply, but secondary supplies have been increasingly important. A lot of those have maxed out or will be in decline. So when? I don't know. I know it will happen. I know when it happens, that based on previous experience, that the uranium price will increase very quickly whenever it happens. $64,000 question is when, and I'm not going to try to answer that because I don't know.
No, I mean,
insiders in the business don't know.
We've heard a lot of wrong answers as well so far. So.
Well, I've been wrong a few times about this too. So
we'll leave uranium from now, take a step back from that, and maybe focus on gold, which I believe you're feeling a little bit more positive about. What is gold looking like so far for you this year?
Well, gold has become increasingly range-bound between 1,300 and 1,360. And it actually, if you looked at charts over the last year or so, doesn't really seldom gets below or above those two channels. So it tried to test 1,300 again last week and went to 1,302 and bounced back. I think it's 1,314 as we speak today. 3 weeks before that, it tried to go past 1,360. It briefly did that intraday, but it finished at 1,357. So it's increasingly range-bound, and a lot of it is negatively correlated with the U.S. dollar. Over the last month or so, U.S. dollars increased 3%, and gold is down from 1,350 to 1,315, and doing the math in my head, that's pretty much 3%. So as long as the dollar is strong, I don't look for a breakout in gold in the near future.
So that would be the catalyst we would need to see to have higher gold prices?
Well, it's one of the catalysts. We can also have a weaker U.S. economy, geopolitical risk in one or the other parts of the world. This Iran deal that's going to come down here at the end of the week, if not today, and we expect Trump to scuttled the Iran nuclear deal for good reason. It's a bad deal for the U.S. If that happens, that's going to introduce some geopolitical risk. I would expect gold to go up. We've seen oil prices surge on that thought over the last 2 or 3 days. Oil's above, WTI is above $70 right now. We've got the pending meeting between Little Rocket Man and the old dotard. They're actually going to sit down and talk. I don't think that venue's been announced, but if there is progress made with North Korea and the U.S. in terms of getting rid of nuclear programs in North Korea, that's going to be negative for gold because it's going to reduce some geopolitical risk. So those are some of the factors. We've also should not neglect to mention that we're coming into the low season for gold in about a month. Mid-June, let's say 5 weeks, 6 weeks is the seasonal low for gold demand. And we normally see a seasonal, if not a year low during that period of time. So going forward, I don't see a lot of catalysts on the immediate horizon going to move gold above that magical number of 1360. If it gets there, when it gets there, and I'm convinced it will, when it gets there and sticks there, then the next big resistance is 1400. If we get past 1400, that's going to be very good for a bunch of gold stocks.
Okay, so we need to exercise a little patience for now. Just in closing, why don't you give me an update on some of the gold stocks you're looking at right now?
Well, I can tell you the ones I cover. I cover Legion Gold. They are a spin out of Columbus Gold. They are drilling round the clock at East Side. We expect drill results imminently on that, and a new resource estimate at East Side, which we expect to increase significantly. I cover Ely Gold Royalties with 70 prospects, and a significant number of those vended to joint venture partners and or have royalties, non-producing royalties, but some with advanced smelter returns royalties. In Nevada, I'll be visiting that company in about 6 weeks, and we picked it at 9 cents. It's been as high as 14. It's settled back down into 11-cent range. So for people that didn't get in when we first picked that stock, it might be an opportunity now. I cover Eagle Plains Resources. They've just spun out Taiga Gold. We got our 50% dividend on that. SSR Mining is drilling with 2 or 3 rigs, not sure exact number of rigs, in Saskatchewan as we speak. And once again, we're hopeful for very good gold results from that program.
Thank you very much. That's all from me. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Mercenary Geologist Mickey Fulp.